over the past year, Target stock has been getting hammered. You can see they're down around 28.64%, and year to date, they are now down around 19.16%. The company is currently trading $122.60 per share. Now, if we zoom out and look at the past 5 years, you can see they actually are up around 38.13%. But you can see in around August of 2021, they were trading as high as around $260 per share. So their share price has more than halved during that time, and we've seen some pretty big drops in the share price. You can see right here in May of 22, when the company had a major reduction in its share price, it was the largest single day drop, and that's when the company released an earnings report stating that they had higher than needed inventory levels. And since then, they've dealt with problems such as political controversy, and then the most recent problem that the company and other retail companies have been seeing has to do with the rise in thefts at retail stores that is cutting into earnings. And we saw a really terrible example of this, unfortunately, the other day with Dollar General's most recent earnings report. You can see right here, they saw a dip down from $157 per share to around $126 per share. And again, top execs are claiming this was due to theft. They're expecting $100 million in headwind from theft. So with all of these different factors over the past couple of years, Target stock has absolutely plunged. And it does have dividend investors wondering, is Target stock currently trading at a good price? Now, there's a lot of things we need to jump into in this video. Like you already know, we're going to be jumping into my stock valuation spreadsheet, but I also want to look at some investors reports. So let's go ahead and get into it. Now, the first thing I want to do is look at some of the dividend metrics. I'm a dividend investor, so obviously those things are very important to me. Now, the starting dividend yield right now is sitting pretty nice at 3.56%. That's a pretty attractive starting dividend yield, especially when you consider the fact this company is a dividend king. They've been increasing dividend payouts for 54 consecutive years. That's absolutely phenomenal. So when we look out and look at that 10-year dividend growth, you can see 10 years ago, they were paying out around 36 cents per share, but jump forward to now, it is now sitting at $1.10 per share every single quarter. So a really good track record of dividend growth over the past decade. Let's go ahead and look at those dividend growth rates. If I scroll down, you can see the 3-year sitting really high at 17.73%, the 5-year sitting at 11.66%, and the 10-year sitting at 11.14%. Really good dividend growth again for a dividend king. Now, obviously the dividend growth and dividend yield mean nothing if that dividend isn't safe. So let's go ahead and dig into the dividend safety a little bit. If I scroll down, you can see the dividend payout ratio for the trailing 12 months sitting at 59.62. But if you've watched this channel before, you know that my favorite payout ratio to look at is the cash flow payout ratio. That's because dividends are paid out of free cash flow. And you can see the cash flow payout ratio for Target stock sitting right at 28.95%. So that's a pretty healthy spot to be at, especially again, a company that's a dividend king that has such a high dividend yield. That's a really healthy cash flow payout ratio. So from the dividend metric standpoint, there's a whole lot that I personally like about this company. The dividend yield is a green check, the dividend history, the dividend growth, and the dividend safety all get a green check mark for me. They all look great. But unfortunately, I think there's more to the Target story than just the solid dividend metrics. But let's go ahead and dig into some of these investors' presentations. There's only a few things that I want to point out, but I do think they are worth mentioning. If we jump to the third slide, the first thing I want to do is we'll go ahead and zoom in. And if we come over here, you can see the total revenue in millions over the past few years for Target stock. It's a pretty steady upward trend. Now, that's something that I personally like, but the problem we have is if we come over here and look at the net earnings in millions, the steady trend goes up until 2021, and then we saw a pretty large decline in 2022. So despite the revenue jumping up from 21 to 2022, we did not see the same thing with the net earnings in 2021 to 22. In fact, we saw a pretty large decline, obviously not something we want to see from an investor standpoint. Now, if we come down a little bit closer, we can look at the 2022 sales, and we can see how it was diversified across their different products. Now, overall, we can see the product sales for Target pretty diversified, which is actually something that I typically like to see. They don't have too much exposure to any one area with their products. And if we jump over to the 10th slide and scroll down, I'll zoom in just a little bit more, but if we look at the sales by merchandise category, you can see as far as looking at the diversified products, it's been pretty consistent over the last few years. Not a whole lot of fluctuations in where most of their sales are coming from, which again is a positive in my eyes. I like to see consistency in that area. Now, if we go to the 9th slide in the investor's presentation, here's something that I think that's interesting. Now, keep in mind, Target does have a lot of competitors such as Walmart and Kroger, but they're also competing with other companies such as Amazon. And right now, when we look at their sales, we can still see over the past 3 years, the vast majority of all their sales have been stores originated. Now, they are still seeing some decent growth with the digitally originated sales. As we can see, in 2020, it was around 16.6 billion, 2021, 19.7 billion, and 2022 right at 20 billion. I know for Target, online sales moving forward will be a huge point of focus for them. Now, the last thing that I want to point out is actually on a different presentation, but I'll go ahead and zoom in And I want to look at this ROIC. That stands for return on invested capital. And I was actually very impressed with the ROIC that Target has seen over the past 3 years. You can see in 2020 it was sitting at 23.5, 2021 very high at 33.1, and 2022 sitting at 12.6. Now honestly, I thought the ROIC for each of these years was pretty decent, but obviously I don't want to see that much fluctuation. 2021 was a very good year for their ROIC, and 12.6% for a company like Target I actually don't think is terrible, but I don't want to see huge jumps like this. So I will be interested to see where their ROIC ends up in 2023. Now let's go ahead and jump into my stock valuation spreadsheet where we can look at a few different valuation models for Target stock. Like always, if you'd like to be able to download this spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. Okay, let's go ahead and come up here and plug in TGT and hit enter, and you can see all of this data will automatically load in. Now I've already touched on the dividend data quite a bit, and we're currently looking at a 500-day change chart, so you can see again, pretty drastic drop in the share price over the past 500 days. Now analysts currently have a target price of around $150.75. That's a decent bit higher than that current trading price. We can see 2-year return down over 50%, 1-year return down around 29.4%. Institutional ownership is still decent, around 82%, and the beta is sitting right at 1, so the volatility should be pretty close to that of the market. Now the first valuation that we're going to be looking at is Graham's valuation, and I'll go ahead and zoom in, and you can see the formula he lays out for us to calculate intrinsic value here. So we need to plug in our variables to find the intrinsic value. So we have our forward-looking earnings per share, which has been decreased a little bit over the past few months from analysts, 7.6. We then take our growth rate projection, and Target actually has a pretty wide varying range of growth rate projections. So I'm trying to stay pretty close to the median at this point, but then we multiply that by 4.4, which is the average yield of AAA corporate bonds, and divide by Y, which is the current yield on AAA corporate bonds. And at the time of this video, it's sitting at 5.02. That's pretty high, especially when you compare it to where it's been over the past 5 years. And yes, this will drive down the valuation by quite a bit. And you can see this gives us an intrinsic value of $126.57, pretty close to that current trading price. Now keep in mind, the current yield on AAA corporate bonds just a few years ago was as low as around 3.5. So if current market conditions were better and AAA corporate bonds had a current yield of 3.5, you can see that valuation jumps all the way up to $181.53. So this number here obviously plays a pretty large role in the intrinsic value we come to with Graham's valuation. Now the next valuation model that we will be looking at is the discounted cash flow analysis, and the idea behind this is actually very simple. We want to know how much cash flow the company is going to produce in the future, and that will let us know how much the company is actually worth. Now, to actually do that, we need to project a growth rate to the future free cash flows for the company. So what I've done is I plugged in the historical free cash flow for the company so we can see our year-over-year growth rates, and it came to an average growth rate of almost 20%. So that's pretty rapid free cash flow growth. So moving forward, I'm projecting a free cash flow growth rate of around 8% to the future free cash flows and the terminal value, which is the sum of the future free cash flows past the year 2031. I then found the present value of those future free cash flows and added them together, added the company's cash and cash equivalents, and subtracted out their total debt to get their equity value. I then divided by shares outstanding, and we came to a discounted cash flow price per share of $197.16. That is quite a bit higher than that current trading price. Now the next valuation that we'll look at is the multiples valuation. And the two comparables we're going to use in this scenario is Walmart and Kroger. So what we're doing is we're taking their stock price, dividing by their earnings per share to get the price to earnings multiple. We then take the average PE, multiply it by Target's earnings per share, and we come to an intrinsic value of $163 per share. Now the last valuation model that we'll look at is the dividend discount model. And what we do is we plug in the company's quarterly dividend payouts so we can see how much they pay out each year, and this allows us to see our year-over-year dividend increases. Now they had 2 phenomenal years of dividend increases at 33 and 20%, but these 2 years here, nothing special, around 3% and then around 1.85%. And keep in mind, anytime you see a company raise their dividend lower than the rate of inflation, they're technically paying out less in dividends every single year. So for me, that's a pretty substandard dividend increase for a company, especially like Target. But still, moving forward, I'm projecting a dividend growth rate of around 5.5%. Like we saw earlier, I think the cash flow payout ratio is low enough to where they can sustain a pretty high dividend growth rate. We saw that cash flow payout ratio sitting right at around 29%. And then we're also projecting pretty good free cash flow growth. So again, that does lead me to believe that a dividend growth rate of 5.5% is sustainable. So with a discount rate of 8.5%, we come to a dividend discount model price per share of $154.73. So when we jump over to the output tab, we can see our 4 valuations. Graham's at 126, multiples at 163, discounted cash flow at 197, and dividend discount model 154. So when we average those 4 together, we come to an intrinsic value of $160.36 per share. So then we take the current trading price, apply our margin of safety, let's say a 10% margin of safety, and our acceptable buy price is around $144.33. With a 20% margin of safety, it's around $128.29, and with a 30% margin of safety, around $112.26. Now, before we even touch on the actual valuation, there's something we have to talk about. Yes, from a valuation standpoint and even a dividend metric standpoint, it looks like there is a whole lot to like about Target stock, but I do have concerns with how management has handled the political controversy. To me, it does seem like they have been pushing their political agenda above providing shareholder returns, which is a major red flag and a major concern. Personally, I have a very hard time buying into a company that I can't trust to put their shareholders first. So when I look at the dividend metrics, the financial statements, and even the valuations, there's a whole lot that I really like about this company, but I just don't feel that I can trust management right now. Until Target can move away from playing politics and actually focus on providing value to their shareholders, I'm not interested in this stock. That alone is enough to keep me away from this stock, but keep in mind, they are also going to have to continue to deal with the rising theft that is cutting into their earnings. I'll be interested to see how that plays a role in their next earnings report. But there you go, there is a quick analysis on Target stock. Go ahead and let me know what you think in the comments down below. I expect to see some pretty good comments. If you'd like to be able to download this spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. Seeking Alpha is also offering a $50 coupon and 7-day free trial to anyone who signs up at my link in the description, so be sure to check that out. But with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.